We'll move on now to the U.S., where the stock futures pointed to a relatively flat open as investors look to key data releases and speeches by the U.S. Federal Reserve. Now, in the previous session, Wall Street finished the trading day at record highs, with the Dow Jones Industrial Average ending 19.95 points up, hitting an all-time high. Now, looking ahead to Thursday's session, news out of the U.S. Central Bank is set to dominate discussion as a number of leading Fed members are set to deliver remarks. Elsewhere, the House is expected to vote on its fiscal budget for 2018, which will keep the topic of tax reform up at the front of investors' minds. And looking to data, international trade and jobless claims are both due out at 8:30 a.m. Eastern Time, followed by factory orders at 10 a.m. Eastern Time. Though the futures numbers there are looking all green, but they are relatively flat there. Dow Jones Industrial Average at 0.02%, S&P 500 0.02%, and Nasdaq 0.07%. In Asia, markets traded mixed today, with some Australian retailers faltering after lower than expected sales data showed consumers were cutting back. Data from the Australian Bureau of Statistics showed the country's retail turnover fell 0.6% in August. That was the worst decline in sales since early 2013. The broader benchmark ASX 200 finished flat at 5,651.8 points. Elsewhere, Japan's Nikkei 225 gave up slight early gains to close nearly flat at 20,628.56 points. Markets in China, Hong Kong, and South Korea are shut for public holidays. Well, back here in Nigeria, we'll look at the performance of the domestic commodities market as the year enters the fourth quarter, with most reported earnings in the consumer goods sector beating analyst estimates. The consumer goods companies are expected to see significant recovery in 2017, benefiting from an all-round improvement in the state of economy, as well as easy comparables from the previous year. Our consumer goods subsect index at the Nigerian Stock Exchange closed up marginally at 0.03%. That was yesterday. So let's talk to Pamela Basiduke, one of the research analysts at Financial Derivatives Company, for an update on domestic commodities markets. Good afternoon, Pamela. Thank you very much for joining us.
Thank you for having me.
Right, we're presently on the fourth quarter of the year. How have the domestic commodity prices performed so far?
Yeah, so previous quarters in 2017, we were in the planting season in Nigeria, so we saw less commodities supplied in the market, and also we were plagued by high inflation rates we reached an approximate of 20%, the highest in years. But then prices too have remained sticky downwards due to this. But however, presently we are in the last quarter of the season, the year. We're in the harvest season, so we expect to see more domestic commodities in supply in the market. So this should bring prices downwards.
Now, how has this price movement affected companies that use some of these commodities?
Okay, so let's take a look at the FMCG sector. We've seen that FMCG sector has recorded stellar performance so far in 2017. We've seen that in the half year, they've been able to move from a negative growth to a positive growth from negative growth in 2016 to a positive growth in 2017. And we've also seen that this is because of Nigeria is out of a recession currently, and then increased demand too was the drivers of this growth. And then we can also see that through their half-year performance, we attest to the fact that these companies have really performed well this 2017. Now let's take a look. Let's use Nestle as an example. Nestle is a FMCG company, and then they produce goods such as Milo, cereals that we eat, and the likes. And then they make use of these commodities such as cocoa and sugar, and also palm oil, and the likes of this. And then we've seen that Nestle recorded a significant increase in their revenue to up to 52%. And even apart from Nestle, let's take a look at Dangote Sugar and Cadbury. They've also recorded stellar performances, the increase in revenue by 62% and 70% respectively. If you look at, in relation to the stock market, if you look at it, we've seen that Nestle has been able to move from a 3-digit share price in 2016 to a 4-digit share price in 2017 due to the improved performance. And we've seen an upward trend so far in their share prices. Yes, food domestic prices, increased domestic prices have, triggered the increase in their performances. But then we should also know that domestic prices is not the only driver of growth for the stock exchange market.
So, yeah, what are the challenges that you see that still plague the consumer goods sector?
Okay, yes. So we've seen that in the weak labor dynamic, weak labor market dynamics is still a major issue for the FMCG sector. We've seen that consumers are shifting away from premium products to value products. We've also seen that power supply in Nigeria is still epileptic. We're having issues with the discos getting power generated from DENCOs, and then we see that these FMCG sectors are looking for alternative means of ways to get power for continuous production. So we're moving that, getting diesel, which is at a high of around 95 naira at the moment. And then this could also, in the long run, could affect the profit margins. So also, if we take a look at the availability of credit, we know that these FMCGs need to get raw materials. That you have to import raw materials for production. However, availability of credit is still a major issue. So all these challenges do pose a threat to the performance.
Just a quick one before I let you go. What now do you see as the outlook for consumer goods sector for the rest of the year? Okay,
so presently, Nigeria, we're out of a recession. And then we've seen that the PMI is still above its threshold of 50. And then the salaries are being paid at the moment. So there should be a feel-good effect. So we expect to see further improvements in performance of the FMCG sector.
All right, thank you very much, Pamela, for your time. Thank you for coming to the studio. Yeah. All right, we'll take a quick break, and when we return, Kenya borrowers struggle to hang on to their assets as repossessions rise.